What's going on, good people? Welcome back to another episode of Trading My Funded Account. Today is day number 40. It's December the 6th, 2023. We made some trades today, so let's get into it. All right, so today I only made one trade. So before we get into that, let's just discuss the overall market environment that we were trading in, because I think that will help us make more sense of exactly why trade number one panned out the way that it did. So overall, we were pretty much trading in the range between 36,295 and then 36,255 and 250. You could really take this line down here and make it a zone between the close for these bodies and then the wicks down here, and that would give you a pretty good zone. So that was the range that we were trading in, just moving back and forth throughout the pre-market. But when the market opened at 9:30 right here, we see that prices spiked all the way up past the zone, and they had a very significant move to the upside. This move went from the bottom of the zone at 250 all the way up to 36,350. So they moved about 100 points in a span of 2 minutes, which is very significant. But what's even more important is the fact that the market literally gave it all back, came back down to the bottom of the range. But even with all of that selling momentum, once they hit the bottom of the range, they wick past it a little bit. But look at where they closed. They closed right there on that support level at the bottom of the zone. So that's just giving us more confirmation that the zone is legit. And then we just pretty much bounce back and forth, back and forth, back and forth. So let's go ahead and talk about trade number one and talk about what I was looking for. So I was basically expecting for the range to hold up after we saw a false breakout. So the false breakout came at the double top up here at C. Notice how we had top number one and then we had top number two. But what's really interesting is that if you look at the higher lows that were created within the span of this zone, we only had 3 of them, right? So we had higher low A right here. I didn't take this one because I just didn't like the fact that we bounced off the bottom of the zone and then made a lower high right here. So I said, look, we had a lower high and then a large selling candle as prices are coming back into that level. That's a higher low setup that I choose to skip. So I skipped that one. And then we came back on B. It was a higher low right there, but I just wasn't quite sure if the zone would hold up because I saw how strong this selling was. And then this right here is technically a lower high in comparison to where we came from at the top of this swing. So I said, you know what? That's not the best probability setup either at B. So let me just avoid that one. But D was interesting because D was the first higher low that really got established towards the top level of the range. Now, when it comes to a higher low, when it comes near the top level of a range, that is not something that I'm interested in taking because I've seen too many occasions where that higher low doesn't pan out the way that I want it to, and prices actually come down to the bottom of the range. So now I've kind of adapted a mindset where if I see a higher low towards the top of the range, I look for that level to get broken instead of looking for that level to find demand and see support right there. So that's why this higher low is so intriguing, because it's the first one near the top of the zone. Now notice how this higher low pushed us back up to make that double top at C that we discussed earlier. Then we pulled back, came back to retest the higher low support level from higher low D, and we had a perfect test. Look at this wick right here. We came all the way back down and literally wicked off of this level almost to the exact point and then pushed all the way up. So back then in that time period, I was thinking that, okay, the overall trend is still up because we had news that came out at 8:15, which actually pushed us up. So let's just go back real quick and look at that. So this morning, I want to say I think it was the ADP unemployment change. It came out at 8:15 this morning, right here. So after that came out, we pulled back to retest the price level that the news came out from, and then we had a large move to the upside, and then that's when this range got formed that we're talking about now. So I saw that the overall trend was up, and then I saw that we retested the bottom of this zone 1, 2, 3, 4, 5, 6, 7 different times, which is very significant because if prices couldn't break past a range or a support level 7 times, that's telling me that the buying is in the market. And then we have a higher low that gets formed right here towards the top of the range that pushes us up above it. We come back, retest that same higher low, wick off of it, and have huge momentum to the upside. So if you look at this candle right here where the lower high got formed at, before this candle closed, at one time when this candle was open, it was completely green and it looked very promising because you had everything lining up. You had an overall uptrend, prices bouncing off the bottom of the zone, coming back to the top but making a higher low and then breaking out. coming back to retest that higher low that led to the potential breakout, and then you're seeing follow through. It's like, oh, okay, it's looking good. Pretty much the buyers are giving everything they have to push the market back up. But even with the buyers giving it all that they had, they still got rejected. So that's very bearish. And when they got rejected, not only did they get rejected, they also made a lower high that pushed prices back down into the zone. So now we have a false breakout that's shown with a double top that leads to prices making a lower high on a long tail candle wick that pushes prices back into the zone. And then they eventually push prices back down past that higher low support level from higher low D. And then that's when I shorted in expectations that prices were coming back to the bottom of the range. And that's where I got out at. Now, this trade is so interesting because this is almost an exact carbon copy of the trade that I made from yesterday. So let's go back to December the 5th and look at trade number 5. So look at how we had a zone, right? The zone was right here, these two blue lines. We were trading in between there during the pre-market, and we got back into that level as the market moved along at around 11 o'clock yesterday morning. So we had higher low I. Notice how the higher low came above the zone. If you compare that to today, the higher low came towards the top of the range, but it wasn't all the way above it. So not exactly the same, but similar enough where the concept still applies. So we just look for that higher low that created a breakout. We look for that to get violated and for that breakout to see failure. So yesterday we had a higher low at J that pushed prices past the higher low at I, and then I shorted as prices came back into the top of the zone and took it back down to the bottom. Today was a little bit different, but almost the exact same because we had a lower high that pushed prices back into the zone, and then they eventually broke past the higher low support level from D. So today was different because we had a double top followed by a lower high that led to prices breaking past that higher low support level at D, in comparison to yesterday where we had a lower high, just a lower high by itself. But really, now that I'm looking at it, maybe you could consider this candle right here and then this candle right here. Maybe you could consider that a double top, honestly, because if you look at this candle right here, none of these candles over here, not this, or this one, none of these candles closed above the price level for this one wick on this one red candle right here. So technically, I think that is a double bottom followed by a lower high that led prices to break past the support level from the higher low and come back into the range. So that's pretty much exactly what I saw today. Now that I'm looking at it, double top, lower high, pushes prices back into the range, breaks past the higher low support level, you short right there and take it back down to the bottom of the zone. So that was all I did today. I felt like I came in, I followed my trading plan perfectly, because when it comes to trading the trading range, when I'm looking for a false breakout to the upside, this is exactly how I should play it. I can't think of any way that I could have played this trade any better. I played it the exact way I was supposed to. So I was like, you know what? I came in, I did what I needed to. So that's good for me. I made a very decent profit. I'm good for today. Now I'm ready to just study a little bit more and get ready for tomorrow, because I think the way that the market has been picking up lately, the volatility has definitely been increasing slowly but gradually, but it has been increasing. And that kind of makes sense because we have a big news cycle coming up starting on Friday. So on Friday, we have non-farm payrolls, right? So then we come back on Tuesday and we have, I want to say, CPI. And then we come back on Wednesday, we have PPI in the morning. And then we have the Fed announcement at 2 p.m. followed by the conference at 2:30. And then, of course, the day after on Thursday, the day after a Fed day is always volatile. And then, of course, that Friday, everybody needs to put their trades in and position themselves for the weekend. So this next news cycle coming up over this next week is going to probably provide a lot of volatility in the market. So I'm like, look, I need to get ready and prepared for that. So if I can make good trades this week, let me just take it slowly and easy. And then when the volatility comes around next week, then that's when I really want to start opening things up. So I think what I need to do in order to get better is just focus on being patient, and then focus on following my plan and making the right decisions. Like, I think the reason that I was successful today, a lot more successful today than I was yesterday, was the fact that I paid attention to the small details. If you look at when the market opened at 9:30. I didn't take this trade until around 10:25. I had plenty of opportunities throughout the way, but I passed on all of those because they really weren't exactly what I wanted. So I think today was a good lesson to patience. And sometimes when it comes to the market, you have to be patient in order to be successful. So I think that's something I got to work on too, because yeah, I was able to be patient today, but it was definitely some occasions where I was very, very, very tempted to get in, especially when I saw this lower high, this higher low at D come back and get retested. I'm like, man, the uptrend is about to break, but let me just be patient. So that's something I got to continue to work on. And I think if I just keep studying and just stay focused on following my trading plan, I should be good. What I've really been learning over the past couple of months is that when I follow my trading plan, everything usually works out the right way as long as I stick to what my trading plan says exactly down to every single last detail. Most of the time when I take losses, it's either because I strayed away from my trading plan and took trades that were outside of it, or I took trades that were in my trading plan, but I just executed those trades the wrong way. So I think those are the things I need to focus on in order to get better. And that's pretty much all I got for you guys today. I hope you learned a lot about trading the false breakout to the upside and understanding what you need to do when prices come back into the range after they had that false breakout. I know I learned a lot about it. So I'll be back tomorrow on December 7th, 2023, ready to run it back one more time. But until then, you guys, have a good one, study hard, and take it easy.